Hello everyone, George DeSantis here with a look at the market for the week ending September 29th, 2017. I did not do a look at the market last weekend, and before we begin doing this one, let's take a look at the disclaimer. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice, since I am not one. We'll begin by looking at the S&P. And here's a chart of S&P 500, a weekly chart. There are some indications here that really fit the daily chart. So let's not be too confused by these typed in indications here. But let's just take a look at the candlesticks, for example. You can see that the market pulled back until it got to the 30 weighted moving average, this green line, and then it took off again. And so now we're almost 100 points higher at 25.19. When we get to the daily chart, we'll see those targets that I have indicated on this. But in any case, we can see a clear uptrend here. The 4 is above the 9, 9 above 30, all these trend lines. The RSI 12 is now above 60. In fact, it's at 70.67. Commodity Channel Index, CCI, is in positive territory. It's at about 158. MACD trending up and turned bullish, turned positive above the zero line. Williams percent R steady above 50%, and the directional movement index, the directional movement index, the plus line is above the negative line, green above red, and the ADX line is trending up. So ADX tells us if there's a trend. Doesn't tell us the direction of the trend. We have to look at the chart to determine that. So here we have ADX telling us we do have a trend here, significant trend. And so let's take a look now at the daily chart. So this is a daily chart of the S&P 500. Let's note a couple of things. Some time ago we calculated a target from this ABCD triangle, and that target was 25.22. Well, we're at 25.19 as a close on Friday, so we're just about there. We had a smaller triangle here, and that gave us a target of 25.01, which we have already surpassed. I'm also noting an inverse head and shoulder pattern here. The line from A, that yellow line from A to A, would be the neckline. This high here would be the head of this inverse head and shoulder, and this would be a shoulder and a shoulder. We can actually argue for this being a shoulder here, but let's use this as a shoulder and this as a shoulder, and when we do a calculation from that, a target, we get a target of 25.47. So it would be useful to start thinking in terms of 25.47 as the next target. There are those who are calculating a target of 2600, and that's possible in the near future, or by the end of the year anyway. Now, the other indicators, RSI 12, it's above 60, it's at 69.84.84. CCI is above 0, it's at 114, all bullish. MACD trending up from below the zero line, actually from above the zero line. So we came back toward the zero line, and now we're trending up a bit. Williams percent R is steady above the 50% line. And the directional movement index and ADX at the bottom of the chart is telling us the DI plus, the green line, is above the red line, and ADX, this yellow line, is trending up. So the trend is up, and we can see that both the weekly chart and the daily charts are indicating that we are in an uptrend. Market continues to look pretty strong. And we are going into the seasonal play here, which means from about the middle of October, markets tend to move higher until sometime in May or June, when the market tends to level off until for the rest of the summer, you know. So this is looking pretty good for markets here, and I am bullish. I am almost fully invested. So I sent you a daily chart of Amazon with the head and shoulder top, and I thought it might be good to just review it here quickly. We had that head, shoulder, shoulder pattern. We have the neckline here. We can see that the market, Amazon hit this point. That's the beginning of this neckline, the purple line, and it's got some support here, and then it rallied up. This may turn out to be a false breakout. We don't know yet. Now it rallied a little bit from the neckline again. However, it's finding some resistance at the 30 weighted moving average, that green line. So it's still possible that this thing is going to break down, but it could turn out, you know, to be a false head and shoulder pattern, a failed head and shoulder pattern, which means it doesn't go all the way down like we're anticipating at 807. So we'll see how that works out. Right now we can see RSI 12, at least on the daily chart, is below 40. CCI went all the way down, but it's trending up a little, still in negative territory. Likewise, MACD. And you can see Williams for Centaur still below 50%, although trending up a little. And we have a downtrend here. ADX is trending up, and the DI minus is above DI plus. Directional index is a green line. The plus one is a green line. And when the red line is above the green line, we have a downtrend. And if ADX is trending up, it says we do have a trend. So I'll keep an eye on Amazon. I didn't really do anything with it, but it's interesting to take note. Let's take a look at some of the charts. The next chart we look at is on best choice. We look at XLE. Now, one of our friends asked me to take a look at XLE and OIH, and I did. And I said at the time that I didn't know that I would be so interested in oil stocks, because it just seems like from everything I hear, oil doesn't seem to be going much higher than where it is. But we had a nice rally here from about $62 on this ETF XLE all the way up to 69. But if you note right now, it's at an extreme of 99.7. It surpassed the 90% line, and usually, doesn't always true, but usually it's not going to go much higher. It's going to come back and retrace back down somewhere near the 50% line or so. So we'll see if that turns out to be the case. But I was wrong saying that it wouldn't even make this move. I didn't even think that, so I was wrong. But we'll see where it goes from here. The other one, OIH, well, it has the same configuration of the chart. So let's look at something else. And here's a chart of Apple. It's a regression channel. And we can clearly see here that Apple rallies from the 10% line up to the 90, stays there for a while, and comes down to the 10% lines, rallies back up to 90, stays there for a while, and then came back down. So right now, it seems to want to work its way back up. Who knows? But it's now at the oversold level of 15. And if we look at the seasonal on Apple, we'll see that one of the best trades on Apple would be October 7 to October 24. You get a 91% win percentage with an average profit of 7%. And the rating is pretty good, 3.8. So, I mean, I own Apple. I will not sell it here. I will anticipate this move toward the end of the year. Let's take a look at something else. And here's a chart of Facebook. Very, very similar chart. You could see it's almost identical to Apple. It pulled back here, and now it's trending up again. It's at an extreme of 16, so it's oversold. It's still very oversold. And if we look at the seasonals, we get the same kind of a seasonal play on Facebook as we do with Apple. See, right here in October, October 10 to October 24th, 100% win percentage, but it's only, what, 5 years that we have history on. So that's a very limited number. statistically, you can't rely too much on those small numbers. In any case, we look at another stock. Here's an ETF that my friend Terry referred me to some time ago. I bought it. Wish I had bought more. Shoulda, coulda, right? This thing is up 29.8% since January 3rd, and I intend to buy some more of it. This is an ETF of the IBD 50 growth stocks, and it's a good one. So I just wanted to show you that. Maybe there's a seasonal we could take a look at. Not much. There are only 2 years of data, so it's really pointless to look at it here. But in November you get a move here with the technology stocks, etc. So let's take a look at something else. But this is one I would certainly put in my portfolio. I'm going to add. Well, here's a chart of another ETF that I like very much, and I own it. I've owned it for some time. Just as with FFTY, XLK since January 3rd is up it's 21%. This is up 21% for the year so far since January 3rd. So I like this. I have a lot of it. I have quite a few shares, and it's a major part of one of my accounts. Let's take a look at something else. I should mention before we go to something else that this is an ETF of technology stocks. You have the major big technology stocks here, the Microsofts and the Apple and so on. So if you want to own the technology sector, but you don't want to buy an individual one, then this is a nice one to add. Here's Home Depot. Because of the hurricanes, I suppose, Home Depot has had one hell of a run in September. You can see from here all the way up. But I'd be cautious up here because it's above the 90% line. And you see what happens when it gets there. It tends to pull back. But it might continue running. Who knows? Another one is URI, United Rentals. And that has a similar chart. So both of them had a nice run. Will they continue to go higher than that? I don't know, but I wouldn't be buying it right here. Look for pullback. Here's a chart of Netflix. We haven't looked at it in a while. It's one that I still own and like very much for long-term holding. Now, there's a weekly chart, and you can see that the weekly chart's still bullish. The 4 is above the 9, 9 above the 30. These are the moving averages. And RSI 12 is above 60 and so on. So most of these indicators are telling us we're still pretty bullish. And if we look at the daily chart, we'll find it pull back, but it's closed within the buy zone between the 9 and the 30. So I think this is a good buying opportunity on Netflix right here. We're just about at the end of the 15-minute period we're allowed on these videos. So I think I'm going to close it here and say have a wonderful weekend. And we'll try to do this again next week.